So the news has come out that the Federal Trade Commission is going to get the review of the Microsoft acquisition of Activision Blizzard. That's not a surprise because the antitrust chief, the newly confirmed antitrust chief, actually used to do in private practice a lot of work for Microsoft. So I think you run into conflict of interest problems, ethics problems, and that's not confirmed, but that's probably the issue. And that's why you've got the Federal Trade Commission looking at it. They're very aggressive. The DOJ is too, the new antitrust regime. But again, we think basically on precedent and existing law, as big as the Activision deal is at 68 billion or so, it probably under existing precedent ought to go through, ought to be okay. It doesn't mean these guys won't challenge it. We still haven't heard anything from the Federal Trade Commission on the Amazon buy of MGM Studios, and that deal should probably go through. The question will be, what kind of enforcement challenges do they want to bring? Do they want to tilt at windmills, hope they can create new precedents, or actually create adverse precedents for their agenda? That's what they're going to have to all assess as they look through this. And of course, there are foreign jurisdictions, China, others, the EU, that look at deals of this magnitude as well. Separately, you hear Sony buying Bungie, not as big a deal, obviously, the Destiny game franchise, but it shows you that the other console player, Sony, against Microsoft Xbox is going to, compete, and they're going to make acquisitions, and they're going to have negotiating leverage. And a lot of the concern about, some of the games on Activision Blizzard, Call of Duty, which they say will stay, at least for the foreseeable future, on the PlayStation, that they're going to be made available. This isn't something the antitrust laws necessarily have to get into to ensure that all games are available on all consoles. That's not the way the laws work. It's the market, it's competition that does that. So I think these things are basically okay. These deals are fine under the antitrust precedents and the laws as they exist today. But again, it's a new sheriff in town, and we have to see just how aggressively they want to, push the envelope on some of their new antitrust theories. So that's it for me.
Is it similar? I mean, there was an announcement this morning about the, I guess it's not really a deal, but the Warner Media AT&T spinoff. Any thoughts on that?
Yeah. Well, I mean, obviously, to cut your dividend, AT&T's announced a dividend cut, big one, in conjunction with all of that. But that deal is fine, obviously. The bigger concern, I think, from the merger and acquisition perspective in streaming is just some of the background, and Andrew can speak to this, the discussion now about, how many streamers can actually survive in, the huge content acquisition costs, and to hold your sustain your market share, how many services are people really going to subscribe to and all of this. And so against that backdrop, to see more consolidation in the content business, is not surprising. So I think from a competitive standpoint, you're going to see more of that as the various other streamers attempt to survive as the 3 and possibly 4 services that people are going to be willing to pay for as prices rise to cover content costs. And, to subscribe to more than that is going to get bigger than your original bundled cable bill. So I think, that's changing, and you can see how, the services are going to have to consolidate, the content services could consolidate in light of that. As far as the AT&T deals go, that stock's basically been where it's been since 2014. If you look at the stock price, so I mean, they have their own challenges, and Andrew can speak to that. But the dividend cut obviously is the huge news coming out of that spinoff today.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.